Over recent decades, the subject of personal finance and investing in particular has gained significant traction. The game has constantly been changing for years and years. With more and more investing resources being made available to the general public, a greater number of people investing, and a wider range of platforms to use, it can be hard to ignore the influence it is having on the world, and we're here to tell you all about it. Welcome to Blink Investing. Now, this is a channel dedicated to providing you with clarity over the complex but exciting topic of investing. We hope you enjoy our content and greatly appreciate your support. If you wouldn't mind subscribing to our channel, liking to improve the YouTube algorithm, and leaving us a comment, we'd love to hear your feedback. With all that said, let's begin. So we'll start with what is investing. Investopedia states that investing is the act of allocating resources, usually money, with expectation of generating income or profit. The expectation of a return in the form of income or price appreciation with statistical significance is the core premise of investing. Now, people invest for different reasons. It's vital to set your own investing goals and act accordingly. Here are some of the main reasons you should start investing if you haven't done so already. First is to have enough money in retirement, when you're not working in return for income. With retirement specifically, it's worth starting a retirement fund when you're younger, so you don't have to contribute as much when you're older. Here's an example. Let's say you've turned 18 and have inherited £10,000 which you choose to invest in the stock market for the purpose of retiring early at the age of 55. You put this £10,000 into an account and agree to contribute an extra £250 per month until you reach that age. Over the 37 years, you average a pretty good 9% per year. After fees, taxes and so on, you end up with just over £1 million, or £1,054,956.23. You can now retire early and happy. Alternatively, let's say you wait until you're 38 to begin investing, only 20 years after. Perhaps you've started a family and now you feel you're ready to start preparing for an early retirement at the age of 55. You decide to put £10,000 into that same account that averages net 9%. This time, if you only contributed £250 per month until you reach your goal, you're left with £159,533.67. The difference being nearly £900,000 less. If you'd like to retire with £1 million, you're likely going to have to contribute around £2,100 per month at the age of 38, nearly 9 times more. The lesson? Start as early as you can and be consistent. Another reason why investing is so important is for income. You may already have a job, but you feel you could do with another stream of income. One way to do this passively is through investing and receiving dividends. Dividends are simply the portion of profits that companies choose to distribute to shareholders. Through investing, you don't have to do the work of the companies, you simply reap the benefits of owning their stock. Maybe you get to a point where your dividends are equal to your salary. You may even decide to live off the dividends that you receive. Next is to outpace a hidden threat: inflation. Inflation is simply the rate at which the prices of goods and services in an economy increase over a period of time. To phrase this differently, it weakens the purchasing power of your money. If you simply leave your money in cash and never earn a penny of dividends, capital appreciation or interest, inflation will eat away at the value of your hard-earned money, and you won't be able to maintain your standard of living in the future. Since 1990, according to Macro Trends, the average inflation rate in the UK has been 2.54%. This means your cash loses around 2.5% of its value each year. Now, this is important for us investors. An asset that returns 10% annually only receives a real return of about 7.5%. Inflation is a hidden threat because that 2.5% is never directly taken off you. It is merely lost through the time value of money. And finally, it's important to invest for alternative financial goals. You may want to invest outside of retirement, to prepare for large purchases such as a house or paying for university for your children. You don't have to wait until you're retired to take out investments, and you don't have to wait until you're older to enjoy your returns. A lot of people are not aware of the different methods of investing. We're not just talking about account types, such as ISAs or SIPs, but the asset classes you can use along the way on your investment journey. The assets most associated with investing are stocks and shares, representing the proportionate ownership of a company, and bonds, which are fixed income instruments. But there are so many other assets you may choose to invest in, those being mutual funds, index funds, ETFs, commodities, REITs, cryptocurrencies, and more. Over the next few episodes of the Fundamentals series on this channel, we will run through each of these asset classes in detail to help you understand more about each of them and why you may potentially want to invest in them. To conclude, investing is vital. Whether you want to invest enough to live comfortably in retirement or you want to buy your 5th Ferrari, investing will help you achieve your goals. If you don't, not only are you missing out on the opportunities available to you, but you have hidden threats like inflation creeping up on you and your wealth. I urge you to start as soon as you can. That is, as soon as you feel confident to do so. If you've enjoyed what you heard today, please like the video to show your support. Consider subscribing so you don't miss the next videos, and leave a comment if we've missed anything. We can't wait to continue uploading. Thanks for watching.